Hello, this is Japanese Economic Review Channel. Today, we will analyze the January 2026 preliminary data regarding Japan's service sector. Our main focus is the growing divergence between revenue output and labor input, exploring whether this indicates rising productivity or severe labor shortages. January's total sales reached 36 trillion yen, up 5.0% year-on-year. However, total employment was 30.12 million, growing by merely 0.5%. This 10x gap highlights that strong revenue expansion is being achieved without a symmetrical expansion in the labor force. Over the past 12 months, revenue has shown continuous positive YoY growth. After peaking at plus 8.3% in September 2025, it remains solid at plus 5.0% in January. This sustained momentum proves that the top-line expansion is not temporary but a structural growth phase. In stark contrast, labor supply remains stagnant. Headcount growth functionally stalled at 0.0% in mid-2025 and sits at just plus 0.5% in January 2026. This persistent stagnation indicates a severe, chronic labor shortage bottleneck across the nation's service industries. What drives this revenue? Remarkably, 45% of the sector's total growth is generated by just two sectors: information and communications, plus 1.38 points, and transport and postal, plus 0.89 points. Tech investments and robust logistics demand act as the primary growth engines. This matrix maps YoY sales against employment growth. The tech sector sits in the healthy expansion quadrant. Meanwhile, accommodations and eating is trapped in the productivity/price leverage zone, showing high sales but virtually no labor growth, indicating a risky limit. Focusing on information and communications, sales hit 6.42 trillion yen, plus 7.9%, alongside a 2.8% employment increase. Internet-attached services surged by 11.7% in sales and 5.8% in labor. This is the only major sector achieving balanced, symmetrical expansion. Conversely, accommodations and eating faces maximum divergence. Sales surged 8.3%, yet labor grew only 0.2%. Restaurants saw a 10.5% revenue jump with just 0.3% more staff, and takeout/delivery lost 2.9% of its workforce. This implies extreme productivity gains forced by labor shortages. We must also note the infrastructure drag. The medical and welfare sector is massive, employing 8.93 million people. Yet, its growth is sluggish, with sales up 2.3% and labor up just 0.3%. This foundation dilutes the high-paced gains of the tech sectors. This 10-year historical trend illustrates a structural shift. While the total service sector recovered from previous dips, information and communications has shown a relentless, smooth upward trajectory exceeding 6.4 trillion yen, solidifying its role as the undisputed anchor. To conclude, first, the great decoupling proves businesses are generating more yield per worker. Second, tech is the ultimate growth engine, attracting scarce labor. Third, the hospitality pressure cooker faces a critical challenge. Watch for margin expansion alongside potential service quality bottlenecks. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.